Hey traders, welcome back to another video. Thanks for tuning in. First, we want to look at a large time frame when we're looking at any chart, especially things that are pretty volatile, because when you look at a very small time frame, it kind of shifts your emotional state. Whereas if you're looking from a large time frame, it's easier to kind of take a step back, gain a little bit of perspective, and see where we've come from. So from a technical standpoint, it does still look strong, but I'm sure many are aware we are currently in a head and shoulders formation, which is a potential reversal or a topping formation, where we currently see our right shoulder forming just between the 40K and 30K level for Bitcoin, similar to what we saw in the high of the January and end of February state when we were very kind of heavy in that start of the bull market. From a large perspective or large time frame perspective, we are still macro bullish, but from the short time frames, it does look a little bit more worrying, and we'll get to that when we do break down the smaller time frames here. Quick look at the commitment of traders, the COT. We have been seeing quite the decrease in the amount of selling. We have seen a slight increase in the overall buying, but not a tremendous amount. But what's a little bit worrying is we have seen a slight uptick in the overall increase in the sellers for the four largest sellers in the market. These are usually miners, but we see an increase in the selling for the whales and a decrease in buying for those four largest buyers or the whales in the market, which is not fantastic. Ideally, we do like to see an increase in buying and a decrease in selling, kind of similar to what we had in the 9K, 10K range when we were initially calling the BTC breakout. Very similar to right here. We were really calling it, but we see a very sharp decline in the overall selling right before the massive bull market and an increase in buying during that entire period, which is what we're looking for. But not a massive sell-off, which would mean a increase in selling. So it's not that drastic, but overall we are seeing a slight consolidation. We could see a little bit more, a deeper correction if this head and shoulders comes into fruition. But as of right now, we are still holding, and we'll take a look at the smaller time frames as we get closer on in terms of the time frames. But overall, around the 30K zone, we do see quite a bit of wicks, which is indicating buyer pressure coming up and pushing the price back up above major levels. We see candle closures are much higher on the second higher low compared to this one. The candle closures on the weekly chart are around 32K, whereas the candle closures on this current low of around 35K. So overall, buyers are stepping in at a higher point, which is fantastic to see. This current candle, which still has 3 days left, is potentially, if it does close around this level or even higher, forming a nice hammer candle, which indicates a lot of buy pressure coming in, closing not just even above the zone, but very high within that entire week's worth of trading, and recovered quite substantially from its low around 31K. So overall, it does illustrate a story where there is still buyers coming into the market, a little bit of hesitation, and we'll get into the smaller time frames now to get a better understanding of what's happening within just that zone there. But if we take a quick look at what I had a draw on here, is the head and shoulders, left shoulder, right shoulder, and the head. If you look at the logarithmic, it's around 12K for the potential head and shoulders bottoming if it does actually hit the overall target. If you are just drawing it, it's going to extend a lot further out because the numbers are just so much bigger from the 61K to 30K compared to the 30K to 12K. You're just talking in terms of like dollars, but in terms of the actual geometry, it does look pretty similar where 12K could be, 12 to 13K could be the low if we're actually going to hit the full target. I do not think so, but you do have to be aware that it could be an extremely volatile time if we do break that neckline. So if you don't have any, or if you do have any investments that you've made a significant amount of money on, taking a little bit and maybe like staking in a stable coin or putting it somewhere a little bit more stable where you are able to accrue some interest for some compound interest, wouldn't necessarily be a bad thing if we are breaking this 30K range, because it's not hard to take it out and then put it back into the market when there's a little bit more conviction, confidence from the bulls. So let's now go into a smaller time frame, looking at what happened within this right shoulder, which is still a higher low from the previous low, but it's a little bit nerve-wracking seeing what occurred within these past few days here. So Perfect. We can just draw on it right here. So this is that triangle that we see for the right shoulder. This is the right shoulder. And this is that big looping head, and this is that smackdown after the head has been created. So we were talking about this symmetrical triangle potentially breaking to the upside, but unfortunately we did not get that. We saw a break, retest, and the continuation of push, but we do see on the 12-hour chart that there is wicks if we zoom in to the downside, indicating buyers coming and swooping it up right after it has dipped. So we know that that 30K range around here is a major level for buyers to be located. And we'll take a look at a smaller time frame, or at least zoom in a little bit here. So now what we're creating right now is, because we've already validated this descending zone to be a strong level of resistance right here, we're now seeing a descending triangle form where you get that series of lower highs, creating the descending zone, creating the squeeze, and you get that horizontal level of support where you're able to get buyers to hold this major zone. Not really ideal at the end of the head and shoulders, because let's say if the head and shoulders is right here, you have the descending triangle right here, and what it really is it's a series of lower highs that sellers are able to push further and further down each time buyers are trying to push it back up. Buyers are trying to push it back up, push it back up, but they're not able to succeed in even breaking that previous high. So it makes a lower high than the previous high. And then you get a battle between the buyers and sellers again. The buyers win in the very short time frame. Looking at a reverse head and shoulders does not hit target because you're looking at like above this high. So the target ideally would have been hit if you are looking for buyers to step in. It was not hit. The sellers yet again created a lower high, indicating seller pressure just charging in every single time there's a little bit of a rally to the upside. So it's not a fantastic picture that we're currently seeing within the overall market. One thing that is nice is how fast it reacted from that 30K level, as well as, if we zoom in a little bit closer here, the overall relative volume for the buyers has increased substantially, which is great to see. More R-vol for the buyers, indicating that they are interested when we are reaching and hitting that 30K zone. But the price action, in my opinion, does need to break 40K for me to have any real conviction that we're going to be holding this larger triangle formation, because this is still our first wave. We do need to break this zone, which ideally would be the 40K zone, where we see a break around that 40K zone, maybe even get another retest of the descending zone. That will give me a lot more confidence for this potential setup to come to fruition for this symmetrical triangle continuational pattern to the upside. As of right now, I don't see it yet, so I'm staying very patient. If we are taking a look at a larger time frame on this chart, this is the target that we've created for BTC at the start of the year, at the start of 2021, where we're talking about that $250,000 at the end of 2021 for BTC. And if we are taking a look at like the 2-day daily, it's not impossible. It looks probable, to be honest. If you're looking from a large time frame, I do think that this bull run still does have some legs. Usually the last, let's say 20% has 80% of the gains. So I think there is still a lot of room for this bull run to really come into full swing here. But as of right now, quite a bit of fear in the market, which makes sense, because if we do actually fulfill the head and shoulders, that would be quite a bit of a move to the downside. But don't fear if you haven't got in, let's say even now, or let's say you've been slowly dollar cost averaging, you know the possibilities, you know the potential. Have confidence in the overall outlook of it. Look at the long time frames, or if you are a short-term trader, feel free to obviously capture that volatility, make a little bit of money off it, put it in your longer-term investment holds. And yeah, in my opinion, I think that'll hold, but I'm remaining very patient and not using any leverage or anything. I'm just kind of sitting on the sidelines with my investment to see what it does. If it does break 30K, definitely going to take some of the chips off the table, because that would be a pretty devastating blow to the bulls and overall buyers, where it's pretty easy to come back into the market. But I think breaking that 30K zone would be a little bit of a difficulty for me to keep that confidence from the macro side of things. So that's going to be my view on BTC. We'll take a quick look at the Bitcoin dominance chart, and then we'll take a look at some alts here that is interesting. in my eyes, because they have been holding up decently compared to BTC. So we have seen in the past, this is a 2017 bull run, Bitcoin is losing dominance, meaning that altcoins and their market cap are appreciating at a greater rate than Bitcoin. Bitcoin was appreciating all of 2017, or a lot of 2017. And the pullbacks on Bitcoin correlate very well with these pullbacks in the Bitcoin dominance, because when there's fear, uncertainty, doubt in the market, there's going to be a run away from speculative alts into BTC. And maybe Ethereum, but as of right now, it's mainly just going to be Bitcoin. And a lot of pairs are paired with BTC. Like, you can't really trade maybe stable coins for a very small cap alt, whereas BTC you can basically trade almost any alt, or basically every alt, for Bitcoin. So if people are selling their very speculative alts, they're going to be getting into BTC. So we see our first major pullback after we've broken the 57% range, which has been a major level of confluence for us for a very long time. So this is our first push. We think that there is going to be another push to drop the price, or drop the percentage lower than the 36. In my view, in terms of the Bitcoin dominance, I think there's going to be an altcoin frenzy after this long drawn out consolidation. Well, a lot of people are out of the market. They've made some money. They see the potential. They see the opportunity in alts, but they just have a lot of money on the sidelines because their favorite YouTuber is saying that the bull run is over. And once that cash comes into the market and there's a significant influx of capital, I think that's going to be creating the frenzy for the true alt season, which we'll see a little bit later this year. That's my speculation there. But as of right now, I think it's good that we're seeing some consolidation. Looking at past bull runs, it makes sense that there is some consolidations where Bitcoin does take a little bit of its market share back, or a little bit of its dominance back from the alts. And I think that is an indication of an overall healthy market. So as of right now, we're just in consolidation. It would be really, really nice to be able to see maybe like potential series of higher lows. That would be awesome, because then if we do start to break that and then push to the downside, that could be a great confluence. If we see a structure set up on Bitcoin, or maybe some of the alts like Ethereum, that would be a really, really good situation where you see the Bitcoin dominance setting up to the downside. You see maybe something like Ethereum or Polkadot, or maybe a lot of people's favorite token, Cardano, ADA, setting up like a very possible break to the upside. That would be a great confirmation and confluence with the two different charts there. Don't see it just yet, so I think patience is the name of the game as of right now. Major level of confluence that we're currently at right now, around that 37, 38K range. So we want to be careful that we're not just randomly buying. We're being very patient and being very sniper-like with our entries. So I would say, as of right now, patience is the name of the game, and seeing what happens. Let's now look at Ethereum. We see all the different platform tokens right here. DOT's not doing fantastic. Cardano is actually holding up pretty well. I think there's a lot of hype and a lot of interest. They don't even have smart contracts, and Solana has more transaction possibilities in a second. I think they have like 40 or 50,000 transactions per second, which is pretty unbelievable. Nathan showed me Solana, and I'm pretty well hooked. A very interesting project. Polkadot's a little bit older, but it still has a lot of merit, and Ethereum's obviously kind of the legacy smart contract king, I guess you could say. And it still is king, second largest market cap, but it's definitely, I would say, deemed as a legacy token compared to things like Solana or even Polkadot. So looking at Ethereum, it was creating a nice ascending zone that was pressing the price up. See, this is the opposite. Ethereum was actually pressing up, whereas Bitcoin's currently pressing down. So Ethereum does look a little bit better overall than BTC, but it's not great seeing a break in this ascending zone where we've already broken it, already retested. We are just holding on by a thread with that low right here. We can see a very major level of both significant level of resistance and support. We see resistance, resistance, turn to support, turn to support, turn to support, and now it's going to be a potential new level of resistance that we have yet to break because it's a current support. But if we do break it, that's going to be a point where we could pull back and then dump further down. Let's look at a smaller time frame here, where we see a nice pullback at a previous support, as we can see right here. broke down, and now we're pulling back up. So now we're above that support, just holding on a absolute thread. And this is that series of higher lows that we were holding, but we have broken down. So this is a major low that we are currently seeing. If this does break, this low right here does break, and if it starts trailing to go below that zone, this complete structure of the series of higher lows pressing is now invalid, because now we've made a lower low than the previous major low, indicating that the trend has shifted from a consolidation, which would be right around here. Look, if it kind of consolidated around this zone, it would be a move down, a consolidation, and we'd have yet to really form a true direction, either up to the upside or to the downside, and that would be heavily determined by the overall market and Bitcoin. But if we do start to trend down below this low, that could be a pretty scary, worrying thing for Ethereum. And if we get the confluence or Bitcoin's falling below 30K, that would be devastating for a lot of different altcoins. Because if Bitcoin's falling, basically every single altcoin is falling. Maybe the stable coins are doing well relatively, but overall, you're not really going to see a whole lot of green or a whole lot of profits going long anything if Bitcoin is dumping. Shorts are obviously a great opportunity, but if you're an investor, you might want to be either taking a little bit of profit off or maybe even looking at possibly shorting. But I would say patience is a pretty important thing in the crypto market if you're just an investor or just a dollar cost averaging kind of person. But Ethereum is holding up as of right now a little bit better than BTC. We'll take a quick look at some of the other tokens. This is the DEX tokens here. This is 1 inch. You got Uni and Sushi, which is on the ERC, and then you got the Binance Smart Chain largest DEX Cake, which is holding up pretty well, around $17, $18. Sushi's not doing fantastic, kind of at the lower end of an expansion formation, which isn't beautiful, and Uni is not doing fantastic. It made a lower low than the previous major low that Ethereum held, so relatively speaking, Uni is doing less well and is performing less in terms of solid position if you're just investing compared to things like Ethereum or even PancakeSwap, where Cake has been, you can see that low is higher than the previous low, as you can see with the vertical lines, indicating that relatively speaking, PancakeSwap is gaining more buy pressure and holding its value better during the dumps compared to things like Uniswap. Right now, the transactions are actually pretty solid for Uniswap and overall ERC tokens and Ethereum network. It's like reasonable, I guess you could say, compared to what we saw in kind of late winter this year, where it costed $200 or $500 for a transaction on Ethereum network, which is pretty unfathomable. It's pretty unscalable, I guess is a good word to put it. But regardless, Ethereum 2.0 is eventually coming out. Just have to be patient for that. And until then, I say PancakeSwap is a really good opportunity, or anything on the BSC, because that is a heck of a lot cheaper. So that's going to be really the end of the video. We looked over some alts. The main thing I think right now to be looking at is going to be BTC, because I think BTC does need to start holding its ground and pulling a little bit higher and being a little bit more bullish before alts start to rally again. Because, like, I guess in the commodities market, gold usually rallies first, and then the other precious metals go after. Gold kind of opens the door for the rest of the commodities or the rest of the precious metals to get that buy pressure and get that momentum. Similar to Bitcoin, Bitcoin got a lot of its dominance back in October when Bitcoin started the initial rally, and then altcoins came in and absolutely demolished the Bitcoin dominance because they're going to appreciate at a greater rate because they have a lower market cap. It's easier to appreciate when you're extremely small because it doesn't take much capital to actually increase 2x or 5x compared to something that has a market cap like BTC, where you're in the hundreds of billions and, you know, potentially even touching $1 trillion. So it just takes more capital. Funds, institutions, and smart money is coming in, but they're taking their sweet time, and there's still a lot of pessimism and negativity towards this, especially just BTC, but the overall asset class in crypto is slowly getting accepted from the smart money. So I think there's still a lot of money to be invested, especially in these altcoins, but it's just time. every single human being has FOMO in some way or form or another, and maybe people like Warren Buffett and Charlie Munger might never invest, but that's okay. There's a lot of capital floating around that is in the hands of people that are a little bit more accepting of this disruptive technology. So thank you very much for tuning in. Really appreciate it. If you thought this was useful, educational, entertaining, would be greatly appreciated if we do get a thumbs up so we know to continue to make videos like this. If you think that a global macro kind of viewpoint would be more useful, we've been kind of steering more into just the cryptocurrency market, looking at the tools like the Bitcoin dominance or Total 2, which is the altcoin market cap. We have been looking more at that and a little bit less with like the S&P, the NASDAQ, individual stocks or ETFs, US dollar, gold, silver, commodities. We've been kind of separating the two videos. If you think that is a more efficient way to actually get content, we'll continue that. If you just want a whole bunch of different asset classes all in one video, we can do that as well. So either way, if you let us know, we'll definitely try to accommodate. Thank you very much again for tuning in, and until next time, have a good one, traders.